Hi, and welcome to the Market Alert for Monday, the 29th of November 2021. So Friday, it was a 70-year record. That is that the market sold off. It was the worst Black Friday in 70 years, and all predicated on the fact of a COVID variant, Omicron, which actually is an anagram of moronic. Arrived just in time to tamp down the soaring inflation, hawkish rates and exuberant stocks. So as I say there's a key there actually, exuberant stock. So now the market's had its shakeout and correction, which we'll look at in just a moment. This ties in with the implied volatility as well, moving from the low of 1237 to 2378. Could be a bit more weakness today, but the implied volatility is signalling that the current move to the downside could be over there at this time. So have a look at the news while I'm here, see what we've got today. We've got pending home sales, and Powell is speaking at 8:05 p.m. For the rest of the week, let's just have a quick look as well, as it's Monday morning. Tuesday, unusually, there's quite a bit of news there. Powell again is testifying. Clarida is also Yellen tomorrow as well. And then Wednesday we've got, it's ADP week again already. Where does the time go? So we've got ADP on Wednesday, Bailey speaking, Powell speaking, manufacturing, Yellen speaking. Starting to see that pattern again where we're getting all of the federal and central bankers coming out to speak. Thursday, OPEC meeting, another Fed member, never heard of this one, Barkin speaking. And then Friday is a big one. We've got the non-farm payrolls out. The criminal speaking, Lagarde, at 8:30. And then we've got average hourly earnings, non-farm pay, that's the big one this week. Unemployment rate, ISM, and Treasury report. There seems to be a lot of Treasury reports out since Yellen took this job. Unlike when the Munchkin was there, but there you go. So job numbers showing slightly lower on Friday, but we'll worry about that as we draw closer to it. So let's have a look, see what the markets have done. Let's find the Dow. We'll start off with this. So you can see on Friday the market moving sharply lower. Just have a quick look and see where prices actually dropped, or how much they actually dropped by. It was over 1,000 points there, which you can see. Market up on the overnight, which is also something you would expect as well. But trading down to 78% in a bit of a no man's land for this low. It was just close to the 78% retracement there, but as we can see, starting to make its way back up. There's the low overnight. That's not Friday's low, or is it? Let me just double check that. Make sure that I've got that correct. Actually, this is Friday's low. The reason I've checked that is sometimes the overnight is recorded as the market opens before 11 and can shut. Again, it just depends. Sometimes you see this, sometimes you don't. It's certainly on the IG platform and then opens again after midnight. So this is Friday's low. So keep an eye on this one just in case the market has another run to the downside. Meanwhile, in the German DAX, different picture here because this is the close of Friday. This is a real gap up. This is trying to get back above that 200 MA, which you can see has run into problems there. Let's just draw in the fib from here up to here, and you'll see the market also trading into that 78% retracement area and the 89 for Friday. Another big move to the downside as well, as this market traded down ballpark 872 points, which is a big move, as we can see from the DAX there. That's 8 times the average range, actually, if you were to look at the last week or so, or the last month. We go from here to here, you'll see the average number of points there, 137. So a good 6 times the average on Friday there. But finding support overnight is, you can see the gap. This is Friday's low for the DAX. Now this gap to fill though, which is quite worrying, and there's that's what I was talking about, where they start and then they have a break and then they come back, or they start again. So there's a bit of a gap to be filled there. They filled the first one, which we can see there. Will they fill this second one as well, which tends to be a pattern. At the moment, prices have found support at the DP, but any break of this could see a retest of the lows. What I would be inclined to do here, just in case, is from this low to this high, have a look at these areas here. Let me just make it a bit easier to see. Let me just bring down the numbers on these supports there. There we go. So you can actually see those areas of support now if the market does start to move to the downside. These lines here are automatic support and resistance lines, so we can see here and here this is building up a resistance in this area as well, which would need to be taken out if prices are to move to the upside. I'm not going to look at the 2-minute chart all the way back. We'll have a look at the overnight and see where we are. And again, you can see the gap and this gap here. We've got the DP here, so let's just move along and have a look. So fairly quietish until we got a bit of a pullback here. Again, you can see the cluster of volume there at the DP, an area where the market wants to bounce from. Back above the 200 MA briefly, and now attempting to move back to the downside. So even in this short time frame, I'll be looking from here to see if the market can find support at this big round number, because it is also a 62% retracement. If this fails, then we head to 78 and 89. And finally, let's have a quick look in the metals markets. We'll start off with silver, and we can see the market bouncing here as well. They took advantage on Friday, as you would expect. The dollar was down as well, but they just hammered silver to the downside because they could, and it was the last trading day as well. We're oversold at the moment, and the last time we've been oversold in these areas, we've seen the market move back to the upside, so there's a chance we could see the silver market have a bit of a bounce this week. Well, certainly until Friday, because the market waiting for those non-farm payrolls, which are going to impact on the inflation and also the interest rate decision by the Fed as we go into the new year. So silver managing to come back a bit there, but when you actually look at the dollar for Friday, you can see big sell-off there, and they moved silver to the downside as well, just blatant manipulation. The same for gold as well. This also moving lower on Friday, volatile price action on Friday, but also saving support there at 1784 for this market. So again, I would also be inclined to go from this high down to this low and pop in the areas of Fibonacci retracement. So I'll just redraw that. There you go. So you can see where the main ones are if prices continue to move to the upside during the week. It'll take a lot to actually get back up to here before Friday because of the market waiting for those non-farm payroll numbers. So a quick look inside of the 30-minute. You can see on Friday, this is silver. You can see the buying coming into the market at the 22. Sorry, this is the 23 level, traded below, obviously, to 22.88. Needs to hold above the DP level there. And yeah, that's about it really. There's inside the dollar. You can see the big sell-off in the dollar, and yet they hammered silver as well, which is just criminal. But you know, what can you do about it? It's the way they're playing the game at the moment. It just makes it cheaper, that's all. And if you have a look at the gold-silver ratio, you can see this as silver once again became cheaper than gold and allows 77 silver coins to 1 ounce of gold there. Okay, that's it for this one. If there is anything else to report, I'll let you know. But as ever, thanks for watching. See you in the next one.